Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While traders in the Western markets take a break for Thanksgiving, the data stream from the East continues to capture attention. Tokyo inflation picked up after the government reduced energy subsidies, signaling price growth in line with the Bank of Japan's projections. This has fueled speculation over the BOJ's next policy move, with the yen gaining strength against the US dollar. The dollar has also been retreating against major currencies like the euro and pound as they steadily recover, keeping the dollar correction theme in focus this week. Good morning, JK. Dollar correction has been a key narrative this week. What are your thoughts as we head into the weekend?
Good morning, Swaraj. I think the dollar correction I will put down to the thin market with US away on holiday. And, even though it's not a holiday today, likely markets will be very thin today. It's also the month end, and there is a lot of rebalancing that goes on in the portfolios that lead to some sort of demand for the currencies. But in the background, a lot of things are building up. For instance, you mentioned about the Tokyo region inflation, and that has actually come much higher than expected on all the parameters, including core. And Tokyo region inflation generally, portends what is likely to be the inflation for the region, for the country as a whole. And so chances of another BOJ rate hike may already be started to discount by the market. And we know what happened last time when they hiked the rate, and this can be a harbinger for another market sell-off in December as well. Now, other things that are brewing, there is a political, turbulence in France now, with the coalition government set to fall probably if there is no agreement on the budget discussions among the partners. So there is fresh trouble in Europe. German inflation, of course, came higher than expected on a year-on-year basis. Month-on-month, it was lower. Year-on-year basis, it came higher only because the base effect faded away. So I don't think inflation is going to go below 2% anytime soon because of because of these factors. And also the economic sentiment from Europe was quietly better than what was expected. While these things support the euro, but the other thing that is brewing is the trade war. There has been retaliatory statements from Eurozone, Canada, and also Chinese authorities that these tariffs are going to affect both the parties, and if implemented, they will also be ready with their own measures. So we are in for more volatility, more turbulence in the market. And don't forget that US market, which has been almost one-way trip, ignoring all the other factors, negative factors that are ahead, particularly on the inflation in the US, is trading near all-time highs. And who knows, in December, I think there can be some severe profit taking in US market as well, particularly if the Japanese rate hike expectation gain ground. So that will also put the other markets on the negative side. It's been calm, but it is definitely not going to be calmer going forward. It can see some lot of volatility in the month of December, as this is the last day of November as well. And of course, there was no respite for the rupee despite dollar weakening elsewhere, because we saw one of the largest FI outflows yesterday at 11,576 crores, or 1.3 billion US dollar. And markets also fell 1.5% on major indices, sharply reversing some of the gains that it made since last Friday. We need to wait and see whether this is the resumption of the medium-term correction in the Indian market, or just one-off due to month-end factors. But definitely, rupee is quietly moved on to the weakest level just in two sessions. and once again bringing the PSU bank selling into play, but for which you would have seen again much higher USD INR level. Involve the various global factors and the flows that are even if the outflows are not there, even a lack of inflows itself will keep the rupee on the defensive and probably on the weaker side, unless we see a larger down move in the dollar index, which is not foreseen right now. I can't see the rupee sustaining any gains at all. In fact, today's GDP number can be also market mover, because we are expecting 6.5% from 6.7% that was recorded in the previous quarter. And any further slippage, which is not ruled out, because we have seen several high frequency data in India moving lower and urban consumption lower. Private capex has been still to make any meaningful impact on GDP. We know that exports have not done that well also. So a GDP number much lower than expected can also be another negative for India. Of course, we'll keep our fingers crossed, and we need to see whether the 7.2% projection of full year GDP, which RBI has held on to, will be revised down or not. So all said and done, very quiet market so far in the global markets, not so quiet in India, but I think the month of December promises to be more volatile. Thank you.
Thank you, JK. And just quickly summarizing, it's not just Germany, but even in France now the political turbulence has been in limelight. If there is no agreement in the budget, the coalition government may be in trouble. The trade wars are also brewing. The Chinese and the Europeans are making statements about the potential retaliation that may come about in case tariffs are implemented. And of course, all this makes us also feel that December may induce quite a bit of volatility for the markets, as JK mentioned. S&P 500 and the US equity indices, which have been doing well, might come about a profit-taking situation. Indian markets, for that matter, saw a $1.3 billion FII outflow yesterday, and consequently, the Indian indices also took a tumble. Rupee quietly moved to the weakest level towards 84.50, and of course, today we have the Indian GDP, which will be released. Expectation is of a 6.5% growth against 6.7% in the previous quarter. One thing to, of course, keep in mind is that the Indian Inc has been indicating some slowdown as seen by the auto inventories and the FMCG results. So I think the GDP numbers can be quite a bit of market mover, as JK mentioned. That's it from us today. Thanks for listening. Have a very good weekend, and we'll see you all on Monday with the latest round of financial updates.